We're an energy infrastructure company. We're not a pipeline company, we're not a liquids company, we're not a midstream company, we're energy infrastructure. We build the infrastructure for others to move energy, to create energy, to store, process energy of different forms.
We joined up with, I think it was 20 other producers to try and build some new gas pipeline capacity out of Western Canada so we could at least get North American gas prices, because we'd been giving gas prices away for years. I remember selling more 70-cent per MCF gas in British Columbia than I care to remember. It's a bad memory. Alliance Pipeline Management did an open season and were successful in lining up 15-year contracts, and that was, I would say, the really important factor for Alliance Pipeline and ultimately what turned out to be Fort Chicago.
I think the real story about Alliance is the rich gas, the fact that it can transport rich gas, the fact that we've got the largest extraction plant of its type in the US in Chicago, and providing a market access for the liquids as well as the gas.
It's a company that's really accomplished some remarkable things and has created a lot of value for the shareholders and has, really grown up in the market around energy infrastructure. So it's at a point where its growth's really going to blossom. The world is hungry for energy, and infrastructure companies are just really well positioned to take advantage of the opportunity and to create new, growth and opportunity for their company.
Well, we founded the business nearly 15 years ago with an IPO price at the time of $5.95. Today, that would be worth about $34.50. That represents about a 12.7% compound return for our shareholders.
We have a very sound balance sheet. We are a $3 billion company. All our assets are very high quality, relatively new in the infrastructure world.
We've started off with a base of a pipeline and NGL company that, was really a pioneer in bringing gas out of Canada down into the energy markets in the US. We've also been able to diversify the assets that we've got to give our shareholders more of what they're looking for, which is around, a stable dividend, predictable results, a company that, can generate value in a very predictable and consistent way.
Diversification is very important for us. We've been developing skill sets and people within the company to allow us to operate in different businesses.
What we've really tried to do is broaden our expertise, deepen our asset base. It's always been very focused on long-term contracted energy infrastructure.
A good example of that is the High Steep Rock complex we bought. Those assets really added a third to our asset base, roughly $1 billion of new assets. It follows our business model of a take-or-pay business model, which means we get paid whether the assets are used or not.
Since we started paying dividends in 2000 to today, so 12 years, we've paid $1.3 billion of distributions and dividends out to our shareholders. Today we pay nearly $200 million a year.
We work very hard to maintain the dividend they're receiving, and our goal over the longer term is to grow that dividend and provide greater return to our shareholders.
I think that there's a tremendous financial prudence at this company. We are very respectful of our stakeholders, and, shareholders and credit providers and those types of people that are prepared to assist in funding us to do smart things and to build out our assets.
We're a long-term business and continually trying to think about the long term when the market more thinks about quarter to quarter. And so having that that long-term view is difficult. So you've got to go back to these sorts of principles and say, okay, well, we're doing what we thought we should be doing.
We look to attract shareholders who want to be long-term investors in Veresen, receive a fair return for being a long-term investor, and we'll reward them over time. Veresen has a number of exciting prospects in our organic pipeline. We have power plants to build. We have pipelines to build around our existing facilities. We look forward to taking on any acquisition opportunities that come our way, but we don't build our business model around those coming and having to be executed on.
The company's evolved from a holding company to an operating company, and a lot of our growth opportunities down the road, I think, are going to be in this operating company mode.
No, we really felt it was important to evolve the company away from really a joint venture, partnership, holdco model to more of an operating model where we took on more responsibility for our assets and our investments.
Veresen's come from a very small company to a mid-sized company, and we look to grow that into a large company over the next 15 years. However, having said that, the core values of Veresen will likely not change. The underpinning of our strategy, our core investors, the people we try to attract to Veresen will remain the same, all of which are consistent with the strategy that we've had the last 15 years.
Well, last 2 years, I think we've been extremely successful in what we've been able to do, particularly with building out a power business, nearly 1,000 megawatts of generation, and a midstream business that, is half a BCF of processing capacity. Those are sizable businesses, so to be able to bring them in and integrate them in and run them well, and run them safely, those are big accomplishments in the last 2 years.
We view our growth plans to be robust, but we feel we have the financing capability to grow and achieve that growth while maintaining our dividend policy.
Let's build on our success and let's grow. And as we look to grow, we've got a lot of opportunities to grow where we operate.
I, like you, am a fellow shareholder of Veresen, and I'd like you to know you've got a great team that's looking after your money and trying to grow your asset base here to give you solid, stable returns in the future.